Morning, everyone. It's really my pleasure to be here again with you in Introduction to Accounting and Finance, this lovely module. So, today we will discuss a very important issue in accounting measurement. We will discuss the accrual concept, and we also will distinguish between two concepts of accounting, which is the accrual basis and cash basis. We will discuss also the accounting for prepayments. But before we start our lecture today, I'm going to remind you of what we have discussed last lecture. So we discussed one of the most important financial statement, which is the income statement. And as you know, this is a financial statement that indicates the revenues and expenses of the business. So we have discussed some concept like revenues, expenses, profit. So do anyone remember the definition of revenues and expenses? Amazing. That's perfect. That's correct. So revenues is the money generated from the normal business operation. So let's say you are selling food, you cook very well, and you decided to open your small business, you cooking food from home, selling food to the people. Then your sales revenues, that's the main revenues of the business. How we calculate that? Very simple. Selling price multiplied by the number of units sold. Let's say you are working for an accounting consultancy, then the fees for the service would be the revenue for this consultancy. Or let's say you decided to buy your own house and you go to the bank, ask for a mortgage. The interest you paid for the bank, from the bank point of view, that's their revenues. Netflix, you pay £4 for Netflix, aren't you? So that's also a revenue for Netflix from the subscription. And as John has mentioned, the expenses definition, expenses is a cost of operations that a company incurs to generate revenue. So the same business, the small business that we say John have launched his small business as a food from home. He's cooking very well, and then the expenses would be the cost of the raw material. So he goes to Lidl to buy the raw food and then cook the food for the people, sell it. Also, he appoint as a cleaner to help him in the kitchen. So that's a selling and administrative expenses if he's gonna pay a salary for this employee or something. And also, he is paying taxes at the end of the accounting period to the tax authority. So that's another expense for the business as well. Or if you are an employee, you are a marketer, an accountant, you're gonna pay taxes as well. And that's an example of expenses. So revenues minus expenses would be the profit or the loss for the business. When you prepare an income statement, you have some issues in the measurement. We called it measurement issues in preparing income statement. One of it would be the accrual basis. So it's really simple. Accrual basis would be that we recognize our revenues when the revenue is earned. So when I sell the food to the people, that's the time you open your books and recognize that you have a revenue earned. When the monthly salary have to be paid to the employee, that's the time you have to record the expense. When expenses incurred, that's the time you have to recognize expenses. So it's really simple that accountants divide the economic life of the business into artificial time periods. So if you follow the financial statements of a certain company, you're going to see that they release the financial statement each quarter. Some corporation gonna release the financial statement each month, and some of them, if it's really a small business, they're gonna release the financial statements each year. So that's the artificial time periods which the accountant used to recognize the revenues and the expenses of each period. Differences between accrual and cash basis. Accrual revenues are recognized when earned. So when I provide the service of the consultancy, let's say I'm an consultancy in accounting, the time I provide the service, that's the time the revenue is earned and is recognized in my books, regardless whether the customer have paid me or not, regardless the cash is received or not. Same for expenses. So when the electricity bill is due at your house, that's the time you should record the expenses, or at your business, that's the time you should record expenses. So expenses are recognized when incurred, regardless you have paid the electricity bill or not. So that's the differences between accrual and cash basis accounting. Why we usually depend on accrual basis accounting? Because it's more fair, So let's say you're gonna prepare the financial statements for the year 2023, so you should be fairly recognize all the revenues that earned in this period and all the expenses that are incurred in this period, regardless of cash. Okay, so we have a case, so we will be divided into groups. So Sarah, John, and Mark would be group A. Ahmed, Mona, and Lucy gonna be group B. And group A and group B, you working together, each group of you separately, of course, working for solving this case. And the case is about the accrual basis. So Mark Ltd decided to rent a new property to accommodate some employees. So we have here, we expecting that we're gonna pay expenses, aren't we? Because we're gonna rent a place for our employees. They entered into a contract with the landlord on the 1st of October 2023. The contract stated that 1 year of rent was payable in advance. That's interesting. So we're gonna pay the full rent for the full year in advance. The payment amounted to 63,000 and was paid by Mark Ltd on the 1st of October. So let's use our beautiful whiteboard to draw a timeline. So that's the 1st of October 2023. We have a 1-year contract. It means it's gonna be ended on the 1st of October 2024. Okay, so I'm gonna give you, before we continue the timeline, I'm gonna give you 5 minutes to discuss the case. Okay, sorry. Okay, brilliant. So, as you guys have mentioned, you have solved the case brilliant, okay? So thank you Group A and Group B for this answer. It's really amazing. Thank you so much. So let's go back to the timeline. So here the company on the 1st of October 2023, they have paid 36,000 for rent in advance, right? And this contract is for one year. It means 12 months, 12-month period. And at the end of the year, so this would be the 31 of December 2023, they have to prepare the beautiful income statement for the year. That's amazing. So for 2023, the 1st of October, we're gonna open our books. We have paid cash, then cash decreased by 36,000, and rent in advance is one of the prepaid expenses, meaning it's an asset. So we're gonna record a prepaid expenses, which is 36,000. Okay, probably you could also use your T account, prepaid expenses. Here we record 36,000. That's an asset. Why? Because simply I could cancel my contract and get my money back, isn't it? So that's an asset. It's not an incurred expense anymore. But after 3 months, what happened? After 3 months, you have enjoyed a 3 month of rent. Your employees enjoyed the facilities of the building. So you have a 3 month incurred expenses because you have enjoyed the place. So at the 31 of December, we're gonna record that the prepaid expenses decreased by 3 months multiplied by 36,000, gonna be a 9,000. And also expenses incurred, expenses debit would be a 9,000. Okay, so what happened here? Let's go back to the case. How should this be recorded in Mark's financial statements for the year ended 31 of December 2023? So it's really simple. That the first entry gonna be, we recognize that we have paid in cash 36,000, but that's not the time the expense incurred. Okay, because prepaid expenses is an asset. But after 3 months, in 31 of December 2023, we have used a 3 month, we enjoyed the building, our employees used the building, so that's an expense incurred regardless when the cash is paid. So cash was paid, remember, cash was paid on the 1st of October, but here we recognize the expenses at the 31 of December as a 3 month period would be a 9,000 expenses. So in your income statement, you should record expenses for a 9,000 sterling pounds for the December 2023. Amazing, brilliant team. Thank you so much. So any questions? Okay, yes, perfect, thank you. So today we have discussed the concept of accruals. We differentiated between accrual and cash basis accounting, and also we have dealt with a real case of a prepayment issue. Next lecture, be prepared, we will discuss the cash flow statement, very interesting one. And feel free to contact me, drop me an email, or you are mostly welcome to visit me in my office. Thank you so much. I'll see you next week.